Good morning, folks. All right, so here's our economic calendar for the coming week. And Monday, as you can see, for Euro and Cable, there really isn't too much to expect in terms of volatility drivers. So on Tuesday, that's going to be our heavy hitter. In the London session, we have average earnings index for GBP and unemployment rate. And Euro, we have the ZOO economic sentiment. FOMC members speaking at 8:15 for the dollar, medium impact. Then 8:30 a.m. we have core retail sales, and Fed chair speaks at 1 p.m. and 3:30 we have FOMC member Evans speaking. So there's going to be probably a lot of volatility late in the day on Tuesday. And on Wednesday we have CPI for GBP in London, PPI, and 8:30 a.m. we have building permits for the dollar index, medium impact, for New York session Wednesday. Thursday, we have retail sales for London Open and Bank of England credit condition survey. 8:30 a.m. New York. For the dollar, we have Philly Fed manufacturing index and another member speaking at 2:15. On Friday, in London Open, we have public sector net borrowing for GBP. At 10 a.m., we have preliminary consumer sentiment and two members speaking later in the day on Friday. So let's move on over to the charts and take a look at things from a technical stance. Okay, folks, we're looking at the dollar index. Now, I'm going to stay on the daily chart for the dollar because it's most salient. The order block in here, we did not get down to the open on Thursday. We did get a reaction in here, and just as a reminder, this is one of those instances where having a weekly objective and a target for your career, for your trading model, it's important to have it because it keeps things in context. It keeps things moving consistently. It keeps you in the game for the long haul, and it avoids the tug-of-war effect that you'll have with fear and greed. Now, obviously, I can do a whole lot more than 50 to 75 pips a week, but I like to have a life. And I understand how compound interest works. And if I can do something consistently over and over again, it doesn't matter if it's 10 pips a day. It doesn't matter if it's 20 pips every other day. It doesn't matter if it's 25 to 30 pips a week. It doesn't matter if it's 50 to 75 pips. It doesn't matter if it's any number of pips. Whatever you can reasonably expect to do every single week between Sunday's open and Friday's close, whatever that is, this is the part that makes you unique. For some of you, it may be a 15 pip target twice a week. There's your 30 pips. Whatever that model is that you feel comfortable with. Not everyone's going to be able to be pressed into a 50 pip to 75 pip per week model. That's just what I find comfortable, and it's very easy for me to do it. As you can see, I took a holiday, came back, the first day sitting in front of the charts. I outlined a key level here on the daily chart, and just between the low up to the close, that range is all that was required to get me the movement I needed to get 50 to 75 pips. That's it. That's all you need to do. Now, I wasn't around for the earlier part of the week, and that's okay. I don't care. This just as a reminder to you all that using a daily chart will help you frame and build a model, a setup, a timing template. In other words, what's the criteria that would instigate, okay, or move you to the stage of entry? Well, you have to have a level in which you expect a reaction in price, because without the price movement, we as traders can do nothing. We have to have some measure of volatility, and having a daily chart will help us identify draws on liquidity. In other words, the bias, where's the market most likely being taken to, higher or lower. Sometimes it's unclear. At least I'm admitting for me, sometimes it's unclear. So I have to sit on my hands, and you'll learn that too. But there's other times where it's just so obvious that the market will probably have a reaction. And that reaction, while some outside the circle, in other words, if I was go on YouTube and make a video just about this movement here, okay, with none of the preamble that you guys saw in Wednesday's video last week, the message would go right over everyone's head, and in the comment section, if I allowed it, they would all be making a big point about how, well, you missed the big down close on Friday. And they're missing the point entirely. I'm not trying to capture every single movement. You're not going to. No one's doing that. If they were doing it, they would be on social media proving it daily, every single day, every single week. You don't need to capture every movement. And I don't need to try to present myself as a mental giant, because admittedly, I've already said this on numerous occasions. I'm not that bright. I'm just very simple about what I'm looking for. So I know that there is a high probability, or at least I knew Wednesday when we sat down together, that this order block here, in the accompaniment of this BISI, had a likelihood to create a reaction. And since the framework was built upon the daily chart, which is a high-level interbank time frame, if you want to call it that, not that the markets on an interbank level trade on a chart perspective, it helps us frame a context, and it builds a perspective around future forecasts. Now, a forecast is just that. It's not a panacea. It doesn't mean it's going to absolutely occur. So we always have to have some kind of risk management device in place, that it's equity management and a stop loss. And you have to be willing to be wrong and take that loss. If it's wrong, it's wrong. And I could have very easily suffered a loss based on this idea. And that's fine if it would have happened, but it didn't happen. And you saw the results of that on Wednesday. Oh, I'm sorry, on Thursday. So with that, I just want to remind you all that whatever your model is, the smaller, okay, the smaller the objective. Now, you don't want it to be so minute, like I want to make 5 pips, every day. Unless you're an S&P trader, okay, back in the 90s, that's just, to me personally, I think that's too myopic. You have to have some kind of perspective to allow a certain measure of expansion to occur. And these moments where the market will expand higher or lower are going to be most of the time derived from a daily chart. Now, either it's going to be a specific key level it reacts at, or it's going to be a draw to for liquidity purposes. So in this sense, last Wednesday, I outlined this order block from the high down to the open. That was the level I was looking for. It went right in the middle of the consequent encroachment of the wick. We saw that response here and that movement here. So movement down and up provided me the framework to do both sides of the marketplace in cable. That's my favorite pair. Everything was there for me, and Thursday I executed. So if you are hung up on having to know every tiny little movement, okay, that's going to drive you nuts. Now, for study purposes, that's wonderful. That's something you should be trying to do, but not for the purpose of trying to get in there and always doing something. Okay, you're in the mentorship. My number one role as a teacher to you is to learn how to control oneself, because you're the one that's going to basically, at the bottom line and the end of the day, you're the one that's going to make or break you. Now, I can give you all the tools, I can give you all of the insights and all of the protocols and procedures, and as we'll see, specific trading plans in 2020 if you're a charter member. And if you don't have the right mindset, that's still going to not do anything for you, because you will unravel and you will do harm to yourself. And you'll look for some excuse, okay, externally, because you do not have the responsibility. You have to have responsibility in this, and you have to be able to, well, I guess the common expression is plan your trade and trade your plan. And the problem is most of the plans out there are planning to trade with a very retail perspective, okay? I was reading on social media, the new thing is everyone's still retail. Okay, well, not the way we trade. And here, we don't view the market as retail. We don't think of it in execution from a retail stance. Now, we look to exploit those perspectives when it's in line with institutional order flow. But again, all of those views, and if you allow those things to move into your thinking and your psychology as a trader, it's going to act like cancer. Okay, it's going to bother you. It's going to irk you. It's going to make you second guess yourself, create doubt. All those things are being said by people that are foolish. They have no idea what they're talking about. They're not in here. They're not seeing what we do. They have no idea of the context on how we frame price. So when we say that we don't trade retail, we don't view price in a retail scope, it's a very clear and honest description about our analysis concept, or my analysis concept that I'm teaching you. But yes, you will engage through a retail account until you get to a level where you can trade on a prime brokerage. But even at that level, okay, you're having outward influences coming in all the time. And again, 99.9% of the people on social media aren't profitable. They're not consistent, and they're in there trying to distract themselves from that fact. They're either pretending to be something they're not, or misery loves company, and they're trying to drag other people down and basically trolling. So I'm kind of like broad brush responding to a lot of emails, which I'm extremely backed up in. So if you have not received a response in your email, just know that I have a ton of them. I have a very, very large backlog of emails, and I'm certain that if you've sent me a time-sensitive email, you're probably very frustrated right now. But that goes with the, I'm just inundated daily with emails. So I apologize if I haven't gotten to you, and I don't get to you in a timely response. But I'll get to everyone eventually. It's just I have to take them in the order that I get them, except for account-related things for people that are in mentorship, obviously. So anyway, I'm diverting from the focus of the video here. The main point is, before we get into the nuts and bolts of this, is knowing a key level on a daily chart, as we outlined on Wednesday, bullish order block, BISI. The market should, as I mentioned on Wednesday last week, should get a response there. That response, okay, is an intermediate term swing. This movement in here, from low to close, that's an intermediate term price swing. Now, why is it an intermediate? Because it's on a daily chart. Even though its movement is within one single candle, the daily candle, the daily range, in my perspective, is an intermediate time frame. Now, if we look at an hourly chart and a price movement on the scope of, like, for instance, if this whole daily chart was in fact a 60-minute chart, that means every one of these candles would be a 60-minute time frame versus a full daily candle, and we were looking at this single candle and it was 1 hour, then that would just simply be a short-term price swing to me. Okay, everything has to be framed from a 4-hour to daily. That's an intermediate term time frame for me. Anything higher than a daily, which is weekly and monthly, that's a long-term price swing. My forte as a trader, and where I feel most comfortable in, is working with a daily chart, trying to capture the weekly range. So I'm an intermediate to short-term trader in an analysis, but my execution many times is day trading, because that's predominantly where we've been at for months now in the grand scheme of the market structure. This will change. We will not stay in this large range on the dollar. It's going to move. When exactly is it going to move? I'm not going to be able to tell you that, but when I see signatures in price, I can tell you, okay, now we have this, and this is what's most likely going to happen. So when we talk about the market while it's in a range, it's very difficult to try to quell the the impulse for new students, okay, and some of the folks that have been here just for a couple months, show me swing trades, Michael. Show me, long-term position trades. Those are not going to be easily derived in market conditions like we have right now. So again, part of the mentorship is for me to align your thinking with the current market environment. And that's one of those things where if you don't understand that, you will try to squeeze blood from a rock and it won't give it to you. You just can't force a model in a market profile that is not prone to behave that way. So you're not going to get a trending model to speak well to you when the market is in a large consolidation. Like I mentioned on Wednesday, it's in a very huge accumulation phase right now. I mean, there's a lot of institutional partnering between the central banks providing liquidity to large funds. Large funds are about to have things pulled away from them. We're in transition right now. So when that takes place, it takes time. But once that releases and we get that directional displacement, higher or lower, and we don't care. I personally don't care if it runs for the buy side liquidity pool above here or if it runs for the sell side liquidity below here. I don't care. Either one, I would like for them to make a clear directional choice. We haven't seen that yet. Now, with that said, I'm going to segue right into my personal view as the moment shows us in the chart. We would need the bulls to take price above this high. Okay, so if the runs above this high, then and only then would I look for the buy side liquidity pool to be a factor. Right now, we're going sideways with a modest bearish stance. So I'm giving this order block to the open, that price, which comes in at 96.30, we'll call it 96.35, round it to a nice 5 level. It can expand down to 96.35. If we get a reaction there, because ultimately that would be tagging the order block, that would be enough, and it could be just taking out by just a little bit Thursday's low. And then we can get another response. But my hopes are not high on that happening, and I'll kind of flesh out the reasons why now. We have a daily BISI, buy side imbalance, sell side inefficiency, fair value gap here. Now, I want you, for your own study, go down into the 4-hour, the 1-hour, the 15-minute chart, and the 5-minute chart, and you'll be able to refine the exact price level for fair value gap on the 5-minute chart. But I want you to refine this entire BISI to the 5-minute level, and then watch that as we go forward into next week. If we get a breakdown, which I think might be the case, I don't think this is going to support. I might be wrong. It might come down here and just take that Thursday's low and then snap higher. That would be fine. It's no problem. But I think the larger draw on liquidity is to rebalance here, take us down into that 95.90 level, which is essentially where this level is here. All I did was extend that out and just give you a notation for annotating the chart for price purposes. And then we have the volume imbalance in here. Notice there's the body of this candle and the body of this candle is what I'm highlighting. So there's a gap in here when we started trading. So they have to, in my opinion, sort this out and maybe come down to volume imbalance. Now, if we trade through here, this low will not be any speed bump at all. Then they'll want to look for the sell side liquidity over here. But I'm not confident that once we trade down to the volume imbalance that we go lower. I'll know by looking at price at that time, should we get there, if we're going to make a run for this low. Like I taught when we were going over the PD array matrix, you have to take every discount array in the order that they're there. Because each one of these, okay, could turn the market entirely. It's how we traded them, the time of the day, and what day of the week. And what weekly profile are we most apt to be working within. Now, given the scenario that we have Tuesday's high impact news, FOMC related and Powell, that to me is going to be the deciding factor on what we do on these levels. Now, Tuesday we could see it trade to those price points, and that would be reasonable. Or we could go the opposite direction, some measure about, I don't know where we're going to open up at. So we have to see what we do on Sunday's open and how we trade. Now, if we trade ahead of FOMC to these levels, to the BISI or the volume imbalance, which admittedly that's a pretty big range ahead of Powell speaking. I don't think that we would see that, but it would be more likely or more probable for the market to want to reach to these levels on the heels of Powell saying whatever he's going to say in the FOMC related news drivers on Tuesday. So bear that in mind when we look at our weekly profiles. We have to consider the economic calendar, what factors are there that would lead to an expansion in volatility, one direction or the other. And there's more discount arrays and reasons to go down in the chart than there are on the upside, because really we have this large up close candle bearish order block. We traded up into that here, and anything above here in my mind becomes increasingly more bullish. Now, I don't become bullish technically until this high is taken out, and then it becomes a low resistance liquidity run environment for this high. But as it is right now, like I said, we're stuck in the middle of this range. Take the high to the low. We're in this large trading range right smack dab in the middle. So it's very, very, very difficult to forecast when the market's stuck in a very large trading range environment. It's very difficult to forecast the next big move when it's like this. Now, smaller consolidations in an existing clear institutional order flow from a higher time frame, those instances are easy because that's when we trade back to equilibrium. But this larger range, I'm not confident to be able to say, okay, this is what we're doing. We're running this or we're running that in the form of liquidity. So we have to stay very, very close to the vest, if you will, to use a gambler's expression. The draw here down to the 96 big figure, and then sweeping 10 pips below, it would be 95.90, and then making a run for the volume imbalance. Now, it doesn't need to go down to the volume imbalance. It could leave that alone because it really is inside this fractal. But I like it because I think it's, if I were controlling the dollar, I would take it down to here. And then ultimately give everybody the impression that we're going to run this low, but don't, and then take it higher. That's my personal view. Now, does that mean anything? Absolutely not. That's just my internal dialogue. If I were making the market for the dollar, that's what I would do. But what I would do is irrelevant. I have to align my thinking with what the market's showing me. And right now, it's very heavy looking, which means the price will want to go lower, most likely. And this is the draw and liquidity we would look for. Now, that would open up the floodgates for higher euro and cable prices, which we'll move on into. Now, I'm going to stay on the hourly chart for euro simply because I want you to go back and watch the video on Wednesday of last week. So the midweek video for euro, the commentary for the higher time frame is the same. There's no reason for me to go through all that again. We have this consolidation in here, lots of distribution. So many of the up close candles where distribution took place in here. So I'm just basically grabbing the bulk of that consolidation. And I mentioned that if we trade down into between 112.80 and 113 big figure, there should be some measure of reaccumulation and take us up into the volume imbalance here. And then if we get running through here, we would be looking for the buy side liquidity pool here. So really, there's nothing really different about what I mentioned on euro from last Wednesday's video. We're focused on inside this range, and we'll be looking for fair value gaps or bullish order blocks to constitute a setup between this area up to the volume imbalance and leaving something on potentially for a run above these equal highs. That's the framework. Nothing's changed, and I don't want to say anything more about it because I've already said it all on last Wednesday. Okay, so everything remains the same. It does look like we did take out some sell stops here for anyone that was trying to buy the bull flag and looks to me like it wants to move higher. And again, that would be in line with if we make a run to these discount arrays, euro would have no problem at all expanding up into this range where reaccumulation should take place. And when we get into cable in a moment, you'll see what I'm talking about. When we get into these areas like this, what are we looking for? And you'll see it's very, very easy and easy to see. But I'd still think that 113.35 area, 113.30, 113.35 is the objective. In my opinion, I think that's the objective for the week. I'd like to see that as the target for euro dollar if we get our weaker dollar scenario. That's the plan A. Okay, plan B, there is none. That's what I'm looking for. If it doesn't give it to me, I do nothing. Cable. All right, so here's cable. This is our daily chart. Let me zoom in a little bit here. Get a little bit more. All right, so we had a fair value gap in here. We've essentially filled all that in. Small existing fair value gap remains here as well. And we'll see if we get that. We did trade back up into this here, and this is a breaker. So we got to be careful with that. The level at 26.05. So 126.05, 126 big figure. Be mindful that could be a factor and kind of like cap price on the upside. Okay, so we drop down into an hourly chart. And I want you to remember what I said as it relates to cable on Wednesday. I said my eye went right to this. Too clean. Okay? And John Murphy's book, Technical Analysis of the Financial Markets, that book is one I quote a lot of times going back to. Not because those things work. Okay? Those things they are more prone to fail. Okay? But because my view on the price is from an institutional view, not retail thinking, I want to see where price will lull the street money or less informed money into thinking those retail ideas are going to pan out. So when social media clowns think they understand what I'm doing, okay, and they say that I'm not that original, and go back and look at the things that I've cited as resources, they don't understand that those things, we turn those things upside down in the mentorship and we exploit them. Bull flags, trend lines, head and shoulders patterns, all those types of things that retail thinking is. We like to go against that, especially if order flow, as I define it, okay, is suggesting so. And that's the high probability scenario. So you can see clearly that the market is drawing up into this range here. So if we know, as we did on Wednesday, that this level up here, 125.90, I think that's what I quoted you guys because my notes suggest that was the level that we were focusing on. I know that level is not pronounced right now, but in my notes when I click my template, you'll see that it's very pronounced. But nonetheless, the idea is I want you to look at the chart now, okay? And if you did not watch Wednesday's video, if you just, for whatever reason, jumped to this video and you really didn't pay attention to Wednesday's video, you want to stop this video. Remember where you are in the video and the time. You go down, pause the video, and remember that moment on this video. Go back and watch Wednesday's video pertaining to cable. And then come back to this video, because then you're going to get a whole lot more insight about what I'm going to outline here. This is where we were on Wednesday. And I said that we were going to go higher and we were going to press into that buy-side liquidity pool resting above these highs. So in here, we have a measure of accumulation. Accumulating what? Long positions, new long positions. So IPTA will create what? A displacement. We have it here. Price comes back down, fills in that. Price rallies again. Comes back into what? Bull shoulder block. And rallies again. Reaching up into the original consolidation, equilibrium. But the liquidity is resting above here. So are they done? In my opinion, no. I want to take it one step further. Okay, and we're going to add some lipstick to this. And here is what I was framing in your perspective on euro and cable last week. Now, this is very similar to what I expect to see happening in euro dollar. And here, I think that same thing's going to happen like we see here. And I'll explain that to you now. What we have here is the lowest low of this fractal, the turning point, if you will. That's the low I'm denoting. That's where the vertical line is. To the left of that, and remember I mentioned on Wednesday, this is the market maker buy model. So everything to the left of that low is the sell side of the curve. Everything to the right of that low is the buy side of the curve. What does that mean? The up close candles that led to distribution on the sell side of the curve, on the right side of the curve, will become areas of accumulation for long positions. These up close candles, this is that shaded area. This is ahead of this movement here on Wednesday's video. We had displacement. We created a BISI, buy side imbalance, sell side inefficiency, fair value gap. Price comes back down. Yes, it deviates a little bit beyond, outside of the range over here, but that's expected. It's normal because you're looking at a retail price feed and it's a demo account on top of it. So this is your low risk, high probability entry using the market maker buy model. And price creates another return to this up close candle where distribution took place. Remember, this is where they sold during the sell side of the curve. On the right side of the curve, which now is the buy side, attacking the buy side liquidity pool here. This shaded area here, we're going to look at the 15-minute time frame in here. But look at it where we're at now. Now price is expanding on the upside. Into a 15-minute time frame. Don't see it here. You do see the fair value gap here with this one single candle. Price comes back down and rebalances. Another measure of expansion on the upside here. Price comes back down, fills the fair value gap again here. New buying. IPTA instigated it, and price rallies again. Clearing equal highs. Is it done? I don't believe so. We have that level up here, 125.90 to go. Now, the 5-minute BISI fair value gap in here, we're going to look at that now. And there that is. Buy side imbalance, sell side inefficiency, comes down, deviates beyond just a little bit, but nonetheless, it's still fine inside the shaded area. Price expands. So this is a buy, this is a buy, this is a buy, or this is a buy, this is add to a existing long position, this is an add to an existing long position. Buy signals outside of this range of the shaded area on the hourly chart is extended beyond the last known level of distribution on the sell side of the curve. So in simplest of terms and explanation, when you have a market maker buy model, you want to find all of the reference points where the up close candles were while it was dropping. Because as soon as it makes the turn, that's why it's not important to get the smart money reversal or even the low risk buy. Just simply wait until it gets back into these areas here, and you will get your setups, as I outlined on Wednesday. Listen to that video again. Okay, I outline it on the procedure is explained more specifically in the euro dollar, but combine it with what I said in cable, and go through the core content lessons on market maker buy models and sell models. Okay, for you students that feel like the pundits that are outside our mentorship are correct in me basically rehashing or renaming Wyckoff principle. I was doing this before I discovered Wyckoff. Okay, these were things that were just confirming, okay, that it existed well before I discovered it. Yes, okay, the pattern's been there all along. It's because it's market making in essence. It doesn't make a difference if they're now doing it automatically and autonomously through an algorithm, or back in the 1900s, okay, when the markets were trading, from open outcry. There were still people in control of price. Whether you want to subscribe to that view or not, I'm not going to arm wrestle you. But the point is, Wyckoff, when I discovered it, was something that I had already seen in charts. I actually seen the pattern in a video of Larry Williams. Now, he didn't talk about Wyckoff. He didn't talk about market maker buy models and sell models. In fact, he was just talking about accumulation distribution formula, his indicator. But I was looking at the chart and I'm thinking, I see this pattern all the time. It's there, but no one's talking about it. And I understood when price swings higher and lower, it creates these turns. Now, we didn't call them fractals back then. They were just swings, nested price swings. That's all we referred to them as. So I want you to study in addition to my mentorship. I really want you to go out and find all the information you can on Wyckoff, okay? And literally contrast what that style of analysis teaches, okay? And contrast that with what I just showed you here. It's not the same. This is the highest order of understanding order flow using what would be closest thing outside my understanding of price. That's why I said if you are interested in other things to study in my free tutorials, I said take a look at Wyckoff because those things helped solidify who I am. Now, I don't trade Wyckoff. I don't trade supply and demand. Every time people see my charts, they naturally gravitate to, oh yeah, that's that online trading academy, Sam Seiden, supply and demand stuff. No, it's not. It's absolutely not that. And anybody that's gone through his material will tell you that this is light years beyond and better than that. I have a lot of students in this mentorship that have paid thousands, okay, thousands, like as much as a mid-size automobile, okay, to learn from Online Trading Academy. And what I'm teaching blows that out of the water. Now, I'm not in here to puff myself up, but we just had a huge influx of new students, okay? And invariably, they're going to see people say things on the internet. But I want you to go out and investigate all of these goobers' claims about what you're learning and what I teach. Because everyone from Chris Laurie down the list, okay, does not see things like I teach it. They don't. There is nothing out there better than what I'm teaching you. And it gets so much better than this. But these core principles, they have to be understood. Otherwise, when we get into higher order flow, you're going to be lost and you're going to be frustrated and you're just going to feel like you never grasped it because you're not studying the core content. Okay, the core content is essential for you to know what you're going to be learning in Charter Member. Now, Charter members, they see things like this. Maybe they don't see it, before it happens all the time, but they understand more about it than you newer students. And some Charter members are still floundering, even from the first group. I can't just take my stuff in my head and understanding and placing it into people. If I could, I would love to do that. But nonetheless, I promise you, if you continuously work at it, you will get it. Remember, I had all the things I needed. Okay, I had all of them. But it did not take me a week to figure it out. It didn't take me a year to figure it out. It took me 6 years with all the information that was who I am as an inner circle trader. Okay, all these concepts, all the market maker, all the institutional order flow, all the IPTA, all that took place, and then still took me 6 years to formulate an idea on how to put all this stuff together. Now think about it. You think you're going to be the exception to that rule? Even with me teaching you? No. There's so much information. There's so much depth to it all that you have to allow yourself to develop. So even if you become a Charter member, you still have years of refining it. Not that you need new content, because honestly, you have enough content in the core content, but you have to have years of refining it and matching it to a personality that is uniquely yours. And I give you those skills, those protocols and procedures, but it's your responsibility to figure out which one fits better for you and try not to feel pulled in all different directions by other people, because there's no one outside this mentorship, not one person outside of this mentorship has your best interest in heart. Believe me, because if they could switch places with you for free, they would gladly do so. Okay, they're just too cheap or too foolish to not make the investment to be here. Now, for you charter members, you know, this ain't a sales pitch to you. You already here. You're paid. You're done. You're still hearing the same message like the new students are, because these videos go to all of you. It's open, all access, all level mentorship video, the weekly commentaries. But I'm sure you're nodding your head right now. You're like, yeah, this is it. This is the place to be. And you need to allow yourself the time. You're not going to look at this stuff, okay, like it's sold in retail education. Oh, yeah, you just watch a video, buy my course, and look for these signals to pop up. And when these signals pop up, you take a trade. Man, that's dumb. Nobody. If that's the case, they'd all be rich. They're not rich. They're not making money off of that. They're not consistently profitable. You are learning how to decipher price action, time setups, frame setups for risk management, and you're internalizing a model over a period of time that's going to perfectly fit you. I don't sit down and say, okay, this is best for you. Now, I can say these are the best scenarios to work within to discover what your personal model will be. But you need to be very flexible and patient, because if you're not, I promise you, even my best material will be of no use to you if you're not. So I want to leave you with that today and just remind you that these things are very, very consistent. The things that are not consistent are your willingness to stay with a process, and you have to submit to it. And it's hard, I know. 12 months. Oh man, you could have did this in less time. Yeah, and you wouldn't have learned any better. 12 months of core content. Then we have to place these things in a specific order to allow your mind to gravitate to the things that will make you a consistently accurate analyst. And only then can you ever segue from that position to a profitable trader. Because until you are consistent with your analysis, and you need to be consistent with your analysis completely detached from me. So the goal is for you to know what I'm going to say before I say it in these weekly commentaries, or before I point to something in a marketplace saying it's going to do this, it's going to do that, or focus here or focus there. When you are able to do that, you're exactly where you are supposed to be and what you paid to learn. That's graduation. When you know what I'm going to say before I say it, and you're able to find the setups in the marketplace, frame them, manage the risk, and find a positive outcome to that consistently, that's graduation. That's how you know you made it. All of you are going to get there at a different time. I don't care if you started at the same time. Okay, some of you folks that just became charter members are better than the group that first started with me, and they've been with me longer. Why? I don't know why. It's just because you had it click easier for you. You're all watching the same videos. So it's just a constant reminder. I have to keep putting this out there because I get emails from folks that, hey, look, I love the content. I love what you're showing. I can see it when you explain it, and it happens most of the time, during the week when you give the commentary. But I just don't feel confident yet. Well, that's reasonable. You're not going when you go to flight school to be a pilot, you think that you're going to be confident to get in an airplane the first time you buy your book and open up the first chapter and understanding aviation? You're not going to do that. So why is this any different? It's not. It's just very, very technical. And you're learning the hardest thing in the world. I have doctors, okay? I have doctors in this group. And they have told me this is so technical. It's well beyond what they learned in med school. Now think about it. I look at doctors and think, man, they're brilliant. They're highly educated. They're very smart, brilliant folks. I don't think I could do that. I don't think I could, be that intelligent and be able to trust my analysis of someone's health to give them a procedure or process to get well. But what those med students and doctors that are practicing medicine now, that are in this mentorship, what they're doing in their own practice of medicine is the same thing I'm teaching you here. You have to have a process in the beginning. I give you a target to aim for. This is what you should be trying to focus on in bite-sized pieces. And too many of you are just trying to get to the next payment. I mean, you make a payment and the next day you send me a payment again and you're emailing me, hey, I sent you a payment. Can I have access to so-and-so? You're not learning that way. You're rushing this whole thing. You need to have time. And just because your account gets moved to Charter doesn't magically turn into understanding. Because believe me, they're not getting anything but one additional lesson per month. That's it. They're seeing the same things you guys are seeing here. So if you're thinking, and that's what I'm being completely transparent with you all. I don't dangle a carrot and say, be a Charter member, there's 20,000 lessons additional. No. You have a ton of understanding once you go through the core content. And in the price action models I give you, I give one more amplification each month. That's it. And then the weekly commentary. The weekly commentary, me showing you what's going to take place before it happens, that is the mentorship. That's what I was trying to do with the live sessions before in the first group that was so distracting. I had so many people giving me questions and I just couldn't focus. No one could do that well. No one. So this is the mode of delivery I've gone with, and I'm very pleased with it. Now, if it doesn't suit you, then that's fine. You don't need to stay here. But I think if you leave and you try to do other things, you're going to regret not sticking through it, because it's only 12 months and then you never, ever, ever have to pay anything ever again. And you're always in the community here. There's nothing to worry about as long as you stay within the guidelines, and you will continuously learn more content. But I don't think that folks that have a high level of expectation of themselves that is unrealistic are going to do very well here. And that's, I don't know what, that didn't make any sense. The folks that have the highest level of expectation for themselves, they are the ones that typically are the ones that send me emails 6 months, 9 months, 12 months later on. And they're saying they crashed and burned. They have a little bit of short-term success and then they blow it. And they know what they were doing when they were blowing it right before they did it, what they were going to do when they did it, but they just lost control of themselves. You're lacking discipline and you're lacking responsibility and patience. That's why I teach the way I teach. It only comes by this way of doing it. Period. End of story. Now, some of you may get it before what took me 6 years. Like I said, I had all of these things in notes. I understood all of them independently. But it took me 6 years to formulate everything into a cohesive process from highest time frame down to lowest time frame. And you give me any chart, any market, and tell me what time frame it is, and I will give you every classification of where we are going, what it's going to reach for, based on that. But you're not going to be able to do that simply because I gave you videos. You have to be in the charts. You have to study price. You have to see these things. That's why I said the minimum was a year, because you see a full calendar year rotating in and out of seasonal tendencies, the normal market cycle that goes through the monetary system, all those things that take place over a calendar year. You need to see that as a minimum. So if anybody tells you they can teach you how to trade with a 3-week course, a 2-week course, or 1-week course, they're BSing you. Okay, because believe me, their view on price is so myopic then, it's just, it's laughable. It's absolutely laughable. So one of the things I thought about when I was on holiday is what I could say to you as a reminder, because I was reading some of my journals, and one in particular I took with me, and it just so happened to have a entry where I was complaining to myself about how I felt I should have gotten all this sooner. Why am I so foolish? Why is it so hard for me to get through? Why does it feel like there is a barrier there? It's like there's this unseen force resisting in opposition to me learning this, because I could see it very clearly in hindsight. But for whatever reason at that time when I was making my journal entry, I couldn't execute on certain things because of fear. And what I was afraid of at that time was I had high expectations for myself. I was going to do this. I was going to achieve this. I knew, there was no doubt in my mind, at some future date I was going to know how to do this exceptionally well, better than anybody on the planet. That was my goal. I knew it. When I was 20 years old, I knew I was going to be who I am today. I knew it. Now, how long was it going to take? I thought it was going to take a lot sooner. I thought, for instance, I thought that, 6, 7, 8 months, I'm consistent. Man, I figured it all out. It only took me like 3 weeks. That was luck. That was all luck. So what I was fearful of, and some of you may find this is the truth for yourself as well, but what was the instigation behind that journal entry? And I can look at that as an older man now, and being more wiser and understanding. I can remember that day entering that journal entry. I remember it. And the instigation behind all that was that I had extremely high expectations of myself, and that I was going to do so very well. I was going to live an affluent lifestyle. I was going to be able to leave my job and never, ever, ever, ever go back. Well, the problem is, the fear was, if I was wrong about that. What if I was wrong? The only way I would know if I was wrong is if I did the execution and lost. So I was always fearful of entering when the market was most apt to do a very low risk entry with high probability result. So what I would do is I'd sit around and wait for the movement to start taking place. For instance, instead of buying down here, which I knew I should have, I would wait for a price to get up to here. So I'm thinking, okay, well, if it's here now, it shouldn't go back to here. But I would get in the trade. I would see a little bit of initial movement in my favor, but then I would trail my stop loss because I don't want to be wrong. I don't want to be wrong. I could not take being wrong back then. As a new trader that had initial luck, I thought I had the Midas touch. Everything I touched was doing well. The problem with that is it was all circumstantial luck. Everything was lined up for things to go up. Everything was in a primary bull market. And the markets I was trading were in commercial bull markets. That means that they had premiums and they were just going vertical. So anybody could be right in that instance. And I attributed it to wisdom and not infancy. I thought I had figured it all out. And believe me, I could have been no further from the truth than I was at that moment. So when I put my stop loss and trailed up too tightly, these natural returns lower, but not going back to the initial entry that makes it high probability, would stop me out. Well, am I going to get back in? No. I'm scared. I'm too busy worrying about beating myself up about, see, this is the reason why I don't do these trades, because they work, but they always come back and get me. They always come back and get me. Now, do you hear the self-defeating vernacular in that? It's not that they're trying to get me. It was self-sabotage. Now, there are periods where they absolutely will run for stops. But all this was is a return to fair value, going back to a bullish order block. I knew these things back then, but because of my entry, I would block it out. It was like selective hearing. If you have children, you know what I mean by this. They hear what they want to hear. Okay? And as a trader, when you're new, you're like that little undisciplined child. You're going to see what you want to see. You're going to hear what you want to hear. And you're going to do what you want to do. And it's always going to be the most ill-informed decision most of the time. Most of the time. Sometimes it's right, but most of the time it's wrong. And you have to grow through those periods in a very controlled environment. That's why demo is essential. If you try to do these things with a live account, and I don't care if you trade with nano lots, okay, 1 penny per pip, I don't care. You have money involved in that decision, and it's only going to provide you a toxic learning environment. Period. End of story. Pack it in. You will not be consistently profitable. Learn the concepts of institutional order flow, price delivery in a demo account until it's so boring that you absolutely can't stand it anymore. Then and only then, venture into a live trading account. Very, very small trading account. And then do that whole practice of nano lots, micro lots, mini lots, all that business. Because I promise you, if you try to do it any other way, regardless if my name's attached to your learning or not, you're going to blow it. And that's the reason why this mentorship is structured the way it is, because it's meant for you to do well. I don't want you to fail. And I don't care about bad reviews. I got bad reviews from people that never even went through the mentorship. And people are still subscribing by the boatloads in here. I don't care about bad press. I care about the emails that I get when people tell me, this is finally clicking for me. It's been such a long time invested into this, and now I understand exactly what I'm doing. And yeah, I can't tell you how emotional that is for me to read, because I know that moment for me. I know it. I intimately know it. There were so many times in the holiday that I got to relive moments where it's not that I don't remember them or that I forget them. It's just life is what it is. It distracts us. And I forget these milestones I've gone through. That's why I keep journals, because it helps me remind myself of the adversities that I went through to get here. It was not easy, and it's not going to be easy for you. Even with me guiding you, there's going to be adversities, and it's always going to be between your ears. Your mind, how you think, is going to be the number one deterrent to you doing well with this, and the very thing that slows you down. The folks that are in here that are listening to me and doing the very things I tell you to do and what not to do, those individuals are the only ones that have found the consistency. They didn't have the longer than the other folks understanding, that learning curve, because they subscribed to everything I said. Some of you came in here with the preconceived notion, okay, I'm in here, I'm going to learn order blocks. And that's the secret place. And I'm going to learn order blocks here. And order blocks is such a minute little thing. It's just one little piece. That's like trend lines in technical analysis. It's just one thing. It doesn't mean you're going to learn how to do anything at all. There's a place and a reason to expect an order block to do certain things. And that's what I teach you in the weekly commentary. Context. I have to have that to be right in my analysis. Now, I'm not saying that to focus on being right or wrong, but for my analysis to be accurate, therefore profitable, it goes without saying it needs to be accurate. It needs to be correct. So our weekly time spent together midweek and before the week starts, like this one, is the most profitable portion of the mentorship. That's why it's important. If you reach charter, you always have this with me. You always have it. So it helps keep things grounded. No, you can fade me. You can do all those things if you feel confident to do that. I'm not always right, but most of the time I am. And I want you to see that even though there's going to be periods where I might not know something at the time, I may require more data, or I might simply just be wrong, look back over the time that you spend with me, and you'll see that I'm more accurate than I'm not. So you don't get there by luck, and you don't get there right away either. Okay, and the long and short of it is, I want you to have a positive experience here, not because of reviews. You can say whatever you want to say, in terms of your experience here. That to the outside world, I don't care. I live this stuff, regardless of what people believe and what they don't believe. I want you to have a positive experience, because I know once you submit to it, your life will be totally different for the remainder of your existence on this planet. Your perception on things will be different. You won't stress about things as much, because you'll have a sense of control that you feel like you don't have at all right now. Everything is externally controlled. Your boss tells you when you can't do something, for how much money. Well, that ain't something that denotes happiness. In my mind, it doesn't. And it certainly isn't security. So you want to be able to control your family's legacy in terms of wealth. And I commend all of you, because you are doing the very thing that I pioneered in my family. There was a lot of people that tried to get rich doing certain things in my family. None of them were successful. None of them were. And by the grace of God, and a lot of prayer, He's blessed my hands in doing this. And I continuously pray. And for those of you who have faith, I ask you to continuously pray for me, that God continues to give me wisdom. So that way, if He blesses my hands, it will bless you. And that's how I pray. I want to be a blessing to all of you. I want you to be able to teach your children how not to be a slave. Because when you have to work for your bread, when you have to slave for your existence and a meager existence, and not have happiness and joy because you're so overwhelmed with this world's debts, the things of keeping up with the Joneses, supercars, unless you don't have a Lamborghini, you haven't made it. That's crap. Try having a goal of living with no mortgage, a car, regardless of what it is, a mid-sized car with no payment, and a passive income that covers every single expense that you have, and all the things above it for simply going to a couple vacations a year with your family, and not having to live lavishly. You want to talk about being rich? That's rich. When you don't have the world's debts, talk to your friends this week. Ask them what is the top 3 things they would love to change about their life right now. And think about that. I guarantee you, they're all going to say, number 1, I wish I had more money, or I wish I had no debt. And that's the goal that you should have. Get out of debt. Then when you don't have any debt, wealth creation is easy. But when you have debt, and I had debt, it was very difficult to see past that. Because every time I had a loss, it was enormous in my mind. It was like, oh no, I'm going the other direction. And I would literally talk myself into negative thinking and scare myself into developing anxiety and eventually agoraphobia, where I couldn't stand to be around other people because I felt like other people could be in my head and listening to my negative thoughts. And how embarrassing would that be if they thought about how I felt like I was a loser, I was going to lose all of my money, I was going to be homeless. These thoughts, no one wants to think about that, and they certainly don't want other people thinking they thought that way. But as a 20-year-old, I had all those thoughts. And I had youth. But I felt like it was at the end of my world. It was the end of my life. It was the end of everything. Because I basically exaggerated the importance of being right all the time. You don't need to be right all the time. You need to be able to control your losses. When they're wrong, control them. Reduce them to next to nothing if you can. Kill it if you know you have a doubt. And if you're in doubt, stay out of the marketplace. But when these things exist, you go after it. And you let it do its thing. Don't strangle your trades. Don't be in a rush to move your stop to break even. That part of this business is what makes traders profitable. You have to associate holding risk with the natural tendencies of consistently profitable trading. That's all part of it. But you cannot trade with zero risk. And you can't rush to zero risk because it doesn't exist. You're going to always have risk. As long as you're in a trade, the market can go careening against you, gap way beyond your stop. Let somebody come out and drop a nuclear bomb somewhere. God forbid. You want to see a market gap? Yeah, it's going to gap. Now that might, that's not going to happen, Michael. Well, tell them right before Hiroshima. Think about that. Those things can happen at any time, especially in today's world. We're on the teetering edge of a lot of different things. And things are going to get really, really difficult. And if you don't have a means to supply your family with food, shelter, and just the normal comforts of everyday living, forget lavish living. Forget that for now. If you can acquire that, great. God bless you in that. My goal is to make sure people can take care of themselves and their family. That's it. That's the only thing I really care about. That was number one thing that kind of like promoted me in the free content. Like what helped me get that message out was those lessons are still there and they still are helping people. And I've been blessed to be able to have people go through that and come back to me and give me their testimony about what they experienced with it. And praise God that he's been, an enabler in that. But I know this stuff is hard for you. I know it's hard. It was hard for me. But as hard as it is, imagine if you did not have me explaining it to you. Because I've gone through all that painful stuff already. I already know by experience where you're going to have pitfalls. I know where you're going to struggle. And I know that you feel like you got to know everything right now. And I knew I had that same feeling then too. But I can tell you, being where I am now, you don't need to know exactly what you want to know right now. You need to learn the things that I've laid before you in this process. Digest it like that. And I'm promising you, if you do these things, your life will be better for it. Your thought processes about money, your investing style will be improved because of it. All these things will be a positive. They will not be a negative. Now, does that translate to Lamborghinis and Instagram living? Maybe for some of you. I don't know. I don't sell that idea. I don't think it's a healthy idea. I think that folks should just really make a goal to have a home that they own, free and clear, just paying property taxes, which I guess in an argument would be you don't own it. But nonetheless, you want to be able to sustain yourself without your job and your boss giving you your grocery money. And that should be your number one goal. That's the only one that I think you should have in terms of money. Anything above that is a completely unique and personal thing for yourself. But everyone here, even in my free tutorial community, that should be your number one priority, is get out of debt. Because as soon as you can do that, I'm telling you, you think you're happy when you get a winning trade, but you still have debt. Be debt free. Just debt free. Forget profitably trading. Having no debt is such a liberating feeling. You don't feel hindered in your decision making. You don't have the reasons of going back and second guessing what happens if this doesn't work. I'm going to lose money and I could have used that money to pay another month's mortgage payment, or I could have paid grocery bills, or I could have put another payment in for my kids' college tuition, which I think is a biggest waste of money. Because what you're learning here, this should replace college. Because college is teaching you to be a higher paid slave. That's it. With more stress and more pressure. You think it's going to be competitive when you get into those fields that you went to college for? Absolutely. So it's not, I have a piece of paper, I'm going to get a good job and it's going to be easier for me because I've done that. No. I've done all that stuff and it never worked for me. It gave me anxiety. So to get out of that paradigm, remove it entirely. You want to put something in place for your family so you don't need to tell them, hey, go to school, get a good education, get into debt. So when you get out of school, you'll be in more debt than you can afford, and your job will never really pay it off. Or you may not even get a job. Because I can tell you, in the computer industry, knowing what I know about computer programming and going to school for all that stuff, I never was able to secure a job. And I had a very high GPA. Didn't help me. Now, it was all part of my learning to understand computers, because had I not gone through that, and this is how the Lord laid it out for me, I went through that process of learning coding because I wanted to be a systems analyst. I wanted to be able to sit with companies and they would tell me what their need was, and then I would formulate a system and build it, and then I would give this to programmers and they would basically program it. It was maybe like a $75,000 to $80,000 a year job back then, which I guess back then it was a good money. But you can do that in 3 months trading. If you know what you're doing and you submit to the time, you can do that in 3 months and not have to report to some goobers that's going to tell you what your worth is in exchange for your time. I'm not a prostitute. I'm not going to prostitute my life and time for someone else to put a value on it that is not anywhere near what I value my time. My time is much more valuable to me than that. In this industry, trading, not Forex, trading as a whole, you have the ability to carve out whatever your paycheck is in mind. You want to earn, you put the time and effort into it, you can earn that. The only thing changes is the measure of risk that you take. Now, if you set a 1% maximum, regardless of what your account balance is, that's always going to stay the same percentage based. But you're not going to be able to understand and hold trades like that until you grow gradually. If you were, look, if someone placed in your lap $25 million and say, here, you've been really good with a demo account. I know this is not likely, but the fallacy is in your mind, if you had a lot of money, you would do so well because you've learned this and you've learned that. And that's not true. If you are not consistently destroying it, killing the market in a demo, you're not going to do it with a live account. And that's the reason why I make you do this. You have to spend a great length of time in a demo, because what it does is it keeps the focus on the process and the decision making and the management. Until that becomes routine and not affected at all by money and the outcome, be it positive or negative, you're not going to do this. Period. End of story. You're not going to be a fund manager. You're not going to work at a prop fund. You're not going to do this. You're not going to do any of those things unless you do what I'm telling you to do. Because this is how you get there. You cannot, absolutely cannot get to consistently profitable with a very clear perspective and not have emotions controlled and master fear and greed without having submitted to a great length of time with a demo. Because the demo is there to teach you the process and train you to follow the rules. Once you have gone through that, then you have another stage of learning where you apply money. And when you start it with a small amount, you gradually understand more about yourself and you quell all of that desire to be much more profitable, and you manage the fear of taking losses. But if you don't have something to measure it against and compare it to, in contrast, when there was no money involved whatsoever, you are going to fail. Period. Paying for extra months, trying to get into charter members faster, is not going to do anything to fix these underlying issues that every one of us have. No one's exempt from what I just explained. You have to go through this exactly like this. Don't agree with me. If you're strongly opposed to what I just said, no, I agree. Okay, do it your way and come back and tell me how much you made in 10 years. Don't even wait 10 years. Do it in 2 years. Show me how much money you made in 2 years. And then I'll show you some of the students in my group that's done it exactly like I said, and they're smashing it. Now think about that. I see it. I see it personally, and I see it from other people. You want them to be on social media, showing them cars and showing them houses and showing stacks of money. They don't care about that, and I don't personally care about that either. What I care about is their mindset. The things that they say about how it's changed them. I don't care how much money they're earning. What I care about is that paradigm shift that takes place. They no longer fear losing their job. Think about it. I mentioned already there's doctors in this group. What if they lost their job? Do you think they would feel a little bit of anxiety about it? Maybe. But I'm sure they'd be confident they would find something other, some other job. How about you? If you lost your job this week, God forbid, would you be confident that you can quickly find another job right away, making what you make or more? If you don't, that's why you're here. You want to remove that anxiety. Because I was always fearful of not being able to earn enough to live, to end up becoming homeless. And I have a strong affinity for helping people like that because I experienced it. I know what it's like to be without a residence. And I don't want to have anybody experience that. So that's why I poured so much into my free content. But here, you're on a whole different level. You've invested in yourself. You've entered into a partnership with me. And I'm telling you the best of my best. In the shortest learning curve as possible, I'm telling you how to do that. Some of you don't believe me. You think that I'm holding back some secret study or secret approach to getting it quicker. I'm telling you exactly how to get there. Am I holding back certain concepts because of certain factors and certain things? Yes, because of time. You need to learn certain things to get there. But the core content, if you just would have learned that and that was it, nothing else continued on, you have enough. But you're telling yourself you need more because you have not invested the time and the work into the things I've taught you in the core content. So if you're just starting, or if you're in, say, month 5 or month 7, and you have mixed emotions about your ability to use what you're learning, that's normal. That's all normal. Things like that occur in every facet of learning. This one makes it harder because it has money associated with it. It's not like learning a sport, okay, or learning how to golf better, okay. Not every person out there that takes up golfing has the vested interest in becoming the next Tiger Woods. They just enjoy the game. That's not really what trading is. Nobody says, well, I'm going to get into trading because it's fun. No, they want to get into trading because they want to make money, lots of money. Well, that's good. That should be the only reason why you're here, is to earn another form of passive income. And then teach it to your children. And let them teach it to their children. If you do that, you will do the greatest service to your family tree and leaving a legacy that is such a powerful testimony of love. Because you probably won't ever meet certain people in your family tree. We're all expected to live a certain number of years and then we're going to die. But don't you admit that you love your great-great-grandchildren that you will probably never meet? You never laid eyes on them. But don't you love them enough to leave a legacy, to be able to be that person that everybody's going to be talking about going forward? I'm so thankful that, enter your name, cared enough to do this for our family. Think about that. Because all of you are legacy makers. You're leaving a legacy if you choose to. Or you can be greedy and just do it yourself and let your family suffer. And you can be the rich person in your family. But it's not fun. You think it's fun until you do it. And then everybody thinks you're an ugly person. But when you sit down with someone and you show them how to master life, that's joy. They will be indebted to you forever. And you will have a close relationship with them. And you will live a life that's more abundant than any other life. Because you have a positive impact on someone that you love. And they're going to take that experience and they're going to take it and they're going to do the same thing with their children. And their children's going to do the same thing with their children. And that is the purpose of living. Doing for others. Providing for others. And if you don't think that God won't bless something like that, you're sorely mistaken. Because that's exactly why He put us here. So until I talk to you on Wednesday, I wish good luck and good trading. Enjoy the rest of your weekend.